In this video, we're gonna have a look at Broadcom, which is one of the biggest semiconductor companies. Nvidia, AMD or Intel are very famous because of course they're very prominent in the PC industry. Broadcom is not nearly as famous because they're not really operating in that section of the semiconductor business. They create semiconductor chips for things like Ethernet switches or Raspberry Pis, things that are very prominent but not so much in the public view. They are a massive American designer, developer and manufacturer of a wide range of semiconductor and infrastructure software products. So let's have a look here at Broadcom for the last 10 years. Let's try to project their earnings into the future and let's see whether or not we think if we buy the stock today and hold it for a decade, can we expect to outperform the market? So looking at the numbers from 2013, simply looking at revenue alone, we can see a modest $2.5 billion in revenue, which has increased all the way to $33 billion in 2022. They more than 10x their revenue in a time span of 10 years, which is incredible performance here for Broadcom. Looking at their EBITDA, so the earnings before interest, taxes, depreciation and amortization, we see a very similar story, but even slightly more rose-colored than their revenue already was. We see an EBITDA number of $740 million with a EBITDA in 2022 of just over $19 billion here, 38% compounding annual growth rate. So what we can see here is that even though Broadcom is increasing their revenue like crazy, they also increasing their EBITDA margins, 29% in 2013 and they doubled it in 2022 to an EBITDA margin of 58%. Which is the main reason why their EBITDA growth is so much higher than the revenue, because they are able to increase their margins. The moment that we move over here to their debt level, we can see a steadily increasing debt, growing 81% annually, which does sound a bit scary and a bit extreme, but just looking at the EBITDA numbers, it's really nothing to be worried about. Broadcom started off the decade basically unleveraged. They had 115 million in debt in 2013 and it's risen all the way to 43 billion in 2022. Even though it's quite a high number, it's nothing they can't manage with the current earnings that they do have. And on top of that, they also always have some excess cash on the balance sheet. Here in 2022, we saw 12 billion on the balance sheet to really cushion any additional blows or pay back some debt if they are immediately required to. Market cap. Now this is where we really see a beautiful story here for Broadcom, because their market cap has been increasing by 33% annually. Market cap is the price on the open market multiplied by the amount of shares outstanding, and for the past 10 years this number has been increasing by 33% annually. That's an insane return for any stock, and I actually think right now on the open market we can see a market cap doubling their 2022 numbers. So even though 33% is already incredibly high, it's gonna be even higher next year around. Enterprise value is the entire value of the business. So the moment that you take the market cap, so the price on the open market itself, to which we then add the debt and subtract the cash, we get the enterprise value, which is the number that we take into consideration, for example, for acquisitions or merger scenarios. Because not only, let's say for example, Nvidia wants to acquire Broadcom here in the future, not only do they have to buy the shares from the open market, which is about 200 billion in shares, they also have to incur the debt that Broadcom has, which is about 43 billion. The moment that we look at the EV/EBITDA ratio, we're basically saying, okay, how many years of current earnings, current EBITDA, so not growing EBITDA, their current EBITDA levels of 19 billion, how many years does it take for them to buy back the entirety of their enterprise value here of 232 billion. In 2022, that means 12 years, but on average for the past 10 years, we've seen an average multiple of 18.1 times, where I think 2016 of 32 times is definitely a bit of an outlier. I do think right now, because the share price already doubled basically from that 2022 October 31st numbers, that I actually expect their EV/EBITDA multiple to be around the 18 times, maybe even a little bit higher. Net debt to EBITDA basically tells us how solvent a company is, how many years of earnings are required for Broadcom to pay back the entirety of their net debt. Of course, net debt is the debt that they have on the balance sheet minus any additional cash that they have on hand, because they can immediately use this to buy back some of their debt. So the moment that we take the 43 billion and subtract the 12 billion, we are left with a net debt of around 31 billion. Now 31 billion is easily covered by 2 years of earnings, given that they provide 19 billion in earnings every single year. Most of the time we want to look at companies which have a multiple net debt EBITDA ratio of below the 3 times, because after 3 times they are no longer able to leverage themselves with senior level debt. The moment that they want to acquire an additional loan with a net debt to EBITDA ratio of well beyond 3 times, a bank will say, well, actually, you actually are quite over leveraged. You already have quite a lot of debt on the balance sheet, which really does increase the risk of you going into bankruptcy. And if you do, of course, we won't really get our money back. So in order to outweigh that risk, we do ask an additional interest on the loan that we'll be giving you. The moment that they are underneath the 3 times ratio, they can acquire cheaper loans, which is why we're always looking for that number, because it means that they are safely positioned into the future. Let's have a look here at their cash flow statement. So looking at the cash flow from operation, we can see 722 million in 2013, and they have risen that all the way to around 17 billion in 2022. Once again, a massive increase in a 10-year time span. 37%, which is about in line with the EBITDA number that we see as well in their financial statement, in their income statement. Capital expenditure is very low for a company like Broadcom. Most of the cost for Broadcom will come from additional innovations, research and development, as well as additional acquisitions or expansions. Capital expenditure for a company like Broadcom basically comes down to things like replacing malfunctioning equipment or providing a new coat of paint for any of their properties. So that is why their capital expenditure here is quite low. It does not include the R&D costs. The moment that we take the cash flow from operation and we subtract the capital expenditure from that, we get the free cash flow, which is basically all the money that's available in their checkings account at the end of the fiscal year, at the 31st of October every single year. This money can be used for a wide variety of reasons, like for example buying back debt, issuing a dividend, buying back stock, as well as doing additional acquisitions or expansions. Broadcom has been doing additional expansions, but they've also been steadily increasing their dividend here. In 2013, they paid a quarterly dividend of 21 cents, and in 2023 here, so not 2022 but 2023, we saw a recent dividend of $4.60. So they basically increased that dividend in a 10-year time span by about 2,000%, which is absolutely insane. We also see for the last year, so in 2022, for the first time, we saw them buy back some shares, which they haven't really done historically, but they started doing that now. Is that a trend that we will continue to see from them into the future? I think it's quite hard to say based on a 1-year trend, but it might be something that they actually plan to implement here into the future as well. Shares outstanding has increased drastically for the first 4 years as they were getting additional funding, as they really started to set their business up here in 2013. But afterwards in 2017, they've basically remained their share count at the same level, around the 420 million shares outstanding. The moment that we take their free cash flow and divide it by the amount of shares outstanding, we get the free cash flow per share, which has also been steadily increasing by 35% annually. And then we have a look at the price per share, which is basically the price as seen on the open market itself at the end of every fiscal year. 2013, they were worth $45.79. In 2022, they were worth $475.80, a 26% increase in share price in a 10-year time span. But right now in 2023, as I'm making this video, the share price is even a lot higher. Their free cash flow yield on average has been around 6%, where we saw 2022 they were slightly above that with 8%, which kind of coincides with the small multiple that we saw here for the EV/EBITDA ratio as well. 2022 they were relatively undervalued. So this then brings us into the business of trying to forecast Broadcom into the future. And we can see that for the past 10 years, they had an EBITDA growth of around 38%, which is incredibly high for any company I've ever looked at to have over a 10-year period. So I definitely don't expect them to actually reach this number for the upcoming 10 years. So I'm going to be a lot more conservative with my future projections here. I'm going to give them 20% EBITDA growth in 2023 and slowly reduce it to 15%, from which I will then take that as a minimal point for the last 5 years. I'm also going to attach a multiple of 17 times, even though historically they've been at 18 times, just to be a bit more conservative here with my numbers. This gives me an enterprise value 10 years from now of about $1.5 trillion. Less some debt, add some cash, leaves a market cap of around the same number. Divide this by the amount of shares outstanding, and I'm assuming here that the amount of shares outstanding remain the same. We did see them for the past year buy back some additional shares, and this might be a trend that continues into the future as well, but I can't go ahead and spend their free cash flow for them. They're going to have to do that themselves. This gives me a stock price 10 years from now, so in 2032, of $3,477. For their free cash flow model, I'm going to do a very similar thing. I'm going to grow it by 25% here for the first year and then slowly reduce it down to 15%, which I will take as a minimum level once again for the last 5 years. I'm also going to attach a yield of 7%, which is a bit more conservative than the 6% that we've seen for them in their 10-year history. This gives me a stock price 10 years from now of $2,870 with a relatively conservative estimate here for Broadcom. Right now on the open market, I can buy as many shares as I want for $910, which is a vast increase from their previous high here of $530 in 2021. They basically doubled their share price in a 2-year time span. But looking at their EBITDA numbers and EBITDA growth, I do think you'll probably agree with me that they definitely deserve this increased share price. Because taking both my projections, so the enterprise value as well as the free cash flow model, I get an average share price 10 years from now of $3,173 per share. This gives me a compounding annual growth rate, so an increase in the stock price alone of 13.3%. And the moment that we also include the free cash flow that we have projected in our free cash flow model, I expect an IRR, so an internal rate of return of 23% annually. But let's say the price moves up a little bit or goes down a little bit when you're watching this video. Let's see what happens if the price goes up or comes down a little bit. So the moment the price actually drops back to about $650 per share, I expect an IRR with my current projection of 29.2%, which is incredibly high. And anyone who actually picked up some shares of Broadcom here in 2022 for $475 a share has my absolute kudos. They made an amazing bet here on a company that's probably growing in the future quite a bit more. But even if the price goes up a little bit, even as high as $1,200 a share, I still expect an IRR of 18.3%. So this basically means that even though Broadcom saw an absolute run up here for the past 2 years, doubling in share price, I still expect that they can reach a lot higher than they currently are. Thank you very much for watching. Don't forget to like, subscribe and all that good stuff, and I'll see you in the next one. Cheerio!